If you're 55, the next 10 years are going to be the most important years of your financial life. The choices you make right now will determine whether you coast into retirement with confidence or whether you're scrambling to make it work. So let's talk about 6 smart moves to make it 55. Get yourself up for the retirement you've been working toward. Hey, I'm Andrew Rafal, founder of Bayntree Wealth Advisors. And over the past decade, we've helped hundreds of clients in their 50s and 60s build a clear path to retirement so they can maximize income, minimize taxes, and feel confident about their future. So today I'm sharing the exact strategies that can make a real difference for someone at 55. Number 1, maximize catch-up contributions. So at 55, you're going to qualify for catch-up contributions. In 2025, that means you can contribute an additional $7,500 on top of the $23,500 standard 401k limit for a total of $31,000. For IRAs and Roth IRAs, you can contribute up to $8,000, which includes a $1,000 catch-up contribution. And here's a bonus, new for 2025. Starting at age 60, 401k participants can take advantage of a super catch-up contribution, allowing an extra $11,250 per year until age 63. That's additional money going straight into your retirement accounts during your final pre-retirement years. Definitely worth planning for if you're still working in your early 60s, which most of you are. These contributions are a powerful way to boost your retirement savings and reduce your taxable income today. Number 2, run a retirement income projection. Don't just guess at your retirement number, run the math. At 55, you're going to want to know how much income will your savings realistically generate. Are you on track to replace 70 to 80% of your pre-retirement income in retirement? Will Social Security, and if you're fortunate to have a pension, and your investments align, or is there a gap? And here's a pro tip, use conservative assumptions. Instead of an 8% market annual return, plan for 5 or 6%. That way you have a margin of safety. So if you want a simple tool to review your progress and uncover these potential gaps, our free retirement readiness checklist is a great option. It helps you see exactly where you stand and what steps to take. So be sure to grab your copy at the link right below this video. Number 3, decide on debt. Kill it or keep it. At 55, your approach to debt is critical. If you're carrying high interest credit cards, those have to go before retirement. But what about the mortgage? Some people rush to pay it off, but that's not always the best move. If your mortgage rate is under 4% and you're disciplined with investing, keeping that low cost debt might give you more flexibility and liquidity in retirement. Number 4, map out healthcare costs before 65. This is one of the most overlooked areas. See, Medicare doesn't start until age 65. So if you want to retire early, how are you going to bridge the healthcare gap? Well, your options include staying on your employer plan through the COBRA period, looking at the Affordable Care Act marketplace coverage, or working part-time with benefits until Medicare kicks in. See, healthcare costs can range $12,000 to $15,000 per year per person before Medicare. So don't let this expense blindside you. And number 5, supercharge your health savings account. If you're on a high deductible health plan, your HSA is one of the most powerful tools you can use. Why? Simple, because it's triple tax advantage. See, contributions are tax deductible. The investment grows tax deferred, and withdrawals are tax free for qualified medical expenses. In 2025, you can contribute $4,300 if single, or $8,550 if you have coverage for your family, plus the extra $1,000 catch-up contribution once you hit 55. That money inside the health savings account can grow tax-free and help cover healthcare costs in retirement, or even serve as a mini IRA if you pay current expenses out of pockets. And lastly, number 6, stress test your plan. At 55, you've got enough time to adjust course, but not enough time to make major mistakes. Stress test your retirement plan by asking these questions. What if the market drops 20% right before I retire? What if inflation runs hotter than expected, like we saw a few years ago? What if one of us lives to 95? Better find these risks now when you still have 10 years to adjust than at 65 when your options are more limited. Stress testing your plan today can save headaches tomorrow. So if you found this to be helpful, be sure to like and subscribe to our channel. We share new videos every week to help you make smarter moves as you head into retirement. Thanks for watching. Happy planning, everyone.